Stop scrolling. Asia just closed, and the supply chain data is screaming a warning for the US tech sector. And it all comes down to this one number. So, what is happening? The market is sending a signal that makes absolutely no sense on the surface. Micron just posted a huge earnings beat, but its supply chain? They reacted with a massive, immediate sell-off. That, right there, is your red flag. Let's break this down. On one side, you have Micron, green across the board, crushing expectations. That's the headline everyone's going to be chasing. But on the other side is the reality. The key suppliers, I'm talking Samsung and NVIDIA's primary HBM supplier, SK Hynix, they sold off hard. Good news is supposed to lift the whole supply chain. It didn't. You have to ask why. You have got to listen. The market is telling you to ignore the headline. The real story, the one that actually matters, is in the price action. And right now, that action is a flat-out warning. Let me make this crystal clear. This positive news from Micron is not a buy signal for the semiconductor sector. It is a sector-wide warning. So why is this happening? You have to follow the smart money. This isn't random panic selling. No, this is a calculated, methodical exit. The key concept you need to burn into your brain before that opening bell is something called a liquidity exit. This is exactly what the institutional players are doing right now. So what is a liquidity exit? Think of it like this. The big funds use the rush of retail buying on good news as cover. It allows them to unload their huge positions at peak prices while everyone else is piling in. Micron's earnings surprise? It was the perfect smokescreen. It created all the volume they needed to get out clean. And this isn't just a theory. We have the hard data from the Korean market to prove it. Foreign investors were net sellers for the 5th straight day. They literally used Micron's results, which is old news now, a past fact, as their exit ramp. The takeaway here is crucial. They believe semiconductor stocks are fully valued. It's not a growth zone. It's not a screaming buy. For them, the party's over for now. Now, this smart money doesn't just vanish. It rotates. It moves. So the critical question is, if it's pouring out of semiconductors, where is it going? Well, this chart tells the whole story. You can see it clear as day. Money flowed out of semiconductors and directly into aerospace and defense. This is not a coincidence. It is a deliberate capital rotation, and it's being driven by a very powerful catalyst. And that catalyst is a new directive from the U.S. administration for an accelerated 2028 moon landing. This isn't just sentiment. This signals massive, tangible capital spending for the entire global aerospace supply chain. Okay, so let's bring this all back to the U.S. market. This rotation creates a direct risk for tech traders today, a potential NASDAQ bull trap. You know what a bull trap is? It's that false signal where a rallying market appears to break out, sucks in all the buyers, and then reverses sharply, trapping them. So the number one question for the opening bell is this: is any initial rally in tech a trap? There is one number that matters more than anything else this morning, 25,100 on the NASDAQ futures. This is your line in the sand, period. It's simple. If the market fails to hold this support level, it is a clear signal of short-term exhaustion in the tech sector. Any gap up becomes a selling opportunity, not a breakout to chase. All right, let's put this all together into a clear, actionable playbook for the U.S. Open. No guesswork. Here is your trade plan. Screenshot this now. The headline is simple: do not chase the semiconductor gap up. If the NASDAQ fails to hold 25,100 support, you must treat any morning rally in Micron or NVIDIA as a bull trap. However, if the NASDAQ breaks and holds above 25,350, the bullish trend is still intact. In that scenario, your focus should shift immediately to where the strength is: defense and space. So here is your watch list for the open. On the bullish side, driven by policy spending, Rocket Lab, RKLB, and Lockheed Martin, LMT. On the bearish side, based on that institutional liquidity exit we just saw, Micron, MU, and NVIDIA, NVDA. The data doesn't lie. Be ready for the bell.